Hello, in this video we're going to talk about the adjusted trial balance, and we're going to see how we prepare the adjusted trial balance, as well as how we can use that to prepare the financial statements. Now, in the previous video we saw the worksheet, right? And the worksheet helped us go from the unadjusted trial balance, show our adjustments, and get us the unadjusted trial balance. That worksheet is optional, okay? However, the steps of creating a unadjusted trial balance, booking, meaning recording in a journal the adjusting entries, posting those adjusting entries to our ledger, or last chapter we used the T account in place of the ledger. That is not optional, okay? Those have to be done. Preparing the adjusted trial balance also is not optional. The only thing that's optional is that tool of the worksheet. So let's look at the adjusted trial balance here. Okay. So again, the adjusted trial balance gives us or shows us a list of our accounts, as well as the balance, the updated balance of those accounts. So we need the adjusted trial balance in order for us to prepare the financial statements, okay? So very imperative and totally not optional, the adjusted trial balance. Got to be done because we need that information, right? So if you'll notice on the slide here, we have our four financial statements: income statement, statement of owner's equity, balance sheet, and statement of cash flow. These are the order in which you need to prepare them. Income statement is always first, statement of owner's equity always second, balance sheet always third, and then finally the statement of cash flow comes last. There's a reason why we have to prepare them in order. Each of these financial statements build off one another. It's probably not a good term. I don't want to say they build off one another. I want to say that we need information from the previous one to do or to prepare the following financial statement. What the hell is he talking about, right? What does he mean by that? Well, what I mean is we need the income statement first, because the income statement provides us with either net income or net loss, okay? Net income or net loss affects shareholders' equity. So we need that net income before we can prepare the statement of shareholders' equity. Shareholders' equity gives us our equity balance. Guess what? We need our equity balance in order to prepare the balance sheet, okay? The statement of cash flow shows us where our cash flow is coming from and where it's going, right? We'll talk about that a little later. But right now, we need the cash balance in order to prepare that statement of cash flow. So they're all interrelated in a sense. Okay, so what we have here on the left is we have the adjusted trial balance, okay? And we're taking the information from the adjusted trial balance and we're preparing our financial statements. So the first financial statement we need to prepare is the income statement. What information are we taking from the adjusted trial balance to the income statement? Well, we're taking our revenues and our expenses. So on the statement, or on the income statement, we add up all our revenues, add up all our expenses, and we subtract expenses from revenues. So revenues minus expenses equal net income or possibly net loss, okay? There's something I want to point out to you. Notice the income statement that we have here. Notice that, bear with me here, let me see if I can do something. Nope, I was looking for usually in the PowerPoints they have a pointer, but I can't seem to get that. So bear with me. Notice the income statement, right? Notice proper form, we have a header, right? And in that header, we're always going to have first the company name. In this case, it's Mike's Bikes. Second line underneath the company name is the statement that it is. What financial statement are we doing? Well, in this case, we're doing the income statement. And then finally, we have the date, and it says for month ended December 31st, 2016, okay? The income statement covers a span of time. So think of the income statement as a video, right? What does a video do? Well, it records, right, from one point in time to another point in time, and everything in between the video shows. That's exactly what an income statement does. It shows us all the income, all the expenses that we have totaled up for the month of December. Okay, so in the month of December, our sales revenue was $12,200. Okay, again, we need net income or net loss because it becomes an input for our statement of shareholders' equity. Went down too far. Okay, so now we have the statement of shareholders' equity. What are we taking from our adjusted trial balance into the statement of owner's equity? Excuse me. Well, the first thing you notice, bear with me here. There. Okay, so the first thing you notice is from the adjusted trial balance, we're pulling our common stock number, right? So we need the adjusted trial balance. We need to grab our common stock number. So what exactly is the statement of owner's equity? Well, it shows us how owner's equity changes over a specific time period. Did it go up? Did it go down? So if you notice the heading, it looks very similar to the income statement, right? Name of the company. Underneath that, what financial statement are we doing? Statement of owner's equity. For month ended December 31st, 2016. So the statement of owner's equity is just like a video. It shows us how shareholders' equity has changed over the month and what has happened to it throughout that month, okay? Notice how we calculate shareholders' equity and notice our columns. Very important, okay? So first, we have our beginning balance as of December 31st, 2000. That's a typo. Probably should be 2016 since we're doing the month, okay? We have our beginning balance for common stock and beginning balance for retained earnings, right? We started the company off, we have nothing. Makes sense, right? Throughout that month, we did stuff, right? We added common stock. We incurred net income. Those two things increase statement of owner's equity. So in the statement of owner's equity, any additions to common stock are added. Any net income that we earn during the period is added, okay? So notice that the retained earnings column, it increases by the number of, retained earnings increases by the amount of net income, okay? Very important concept to understand that retained earnings will always either increase or decrease by the amount of net income or net loss that we have, okay? And then finally, we need to subtract out any dividend payments, right? Dividends are basically distributions of earnings to our shareholders, okay? So we have net income, right? We have retained earnings. Retained earnings is, think of retained earnings as a bucket that holds all the net income of the company since its inception. Okay, so in this case, we've only been operating a month, so our retained earnings equals our net income. But let's say that next month we make $7,000 in net income. Okay, so next month, at the end of the month, we have to do a statement of shareholders' equity. Guess what our beginning balance is? Our beginning balance is going to be $7,850 starting next month, right? Then we're going to add net income that we have from next month's operations. Let's just say it's $7,000. That means our total retained earnings at the end of December 31st, 2017 is $14,850. Okay? From that retained earnings, we can pay dividends, right? We can distribute some of our earnings to our owners. That's pretty much what dividends are, okay? So keep in mind, we have our total retained earnings, we have our total statement of shareholders' equity, and it equals $37,850. What makes up owner's equity? Common stock and retained earnings, okay? And we need that retained earnings amount to prepare the balance sheet. Nope. Okay. So let's look at the balance sheet, right? So the balance sheet, what is the balance sheet? Well, first of all, the balance sheet demonstrates the accounting equation. So remember from chapter 1, we learned we learned the accounting equation. Assets equal liabilities plus owner's equity, right? And that's what the balance sheet does. The balance sheet proves that assets equal liabilities plus shareholders' equity, okay? So what do we need from the adjusted trial balance to put on the balance sheet? Well, we need all our assets. We need all our liabilities. And we're going to use the statement of owner's equity to grab our shareholders' equity section, okay? So if you notice, look at the heading, right? Company name, just like the other statements we looked at. Name of the statement underneath the company name. December 31st, 2016. So the balance sheet is very different than the income statement and the statement of owner's equity for a number of reasons. But one main reason is the time frame that it covers. The balance sheet you need to think of as a still picture, or think of it as a Polaroid picture. It is the balance of our assets, liabilities, and shareholders' equity at a specific date and time. Okay, it doesn't cover a time period. It's on this date. This is the cash you have. Okay, if we did a balance sheet for, December 15th, guess what? Cash would be our balances would be a lot different. Okay, so very important that we recognize the balance sheet is just a specific date and time. That's it. Okay. Very important. Assets. Notice our total assets here are $60,950. Guess what our liabilities plus shareholders' equity has to equal? $60,950. So the balance sheet has to balance. Okay? So the first financial statement to be prepared, well, it's the income statement, right? Then we do the statement of shareholders' equity. Then we do the balance sheet. Then we do the statement of cash flow. Okay. When we come back in our next video, we're going to look at the closing process and we're going to summarize the accounting cycle. So, very important that we understand this accounting cycle, right? We've covered a lot so far, right? We saw the first stage, the first step of the cycle, right? That was chapter 1 and chapter 2. We need to analyze our transactions. We need to record our journal entries, right? This chapter, we already saw a second stage of that, which is we need to do our adjusting entries. We saw the fourth stage, which is we need to prepare our financial statements. Now we're going to look at the last step, the closing process. So tune back in for that one.